Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. So many investors start by investing in a single family house. But what if your first investment was a much bigger investment? Today we'll talk about how you can go from wherever you are to multifamily investing. And we've got a great guest today on the Real Estate Guys radio program. The Real Estate Guys are throwing a party and you're invited. Join us live at the New Orleans Investment Conference, October 19th through 22nd. Now in its 47th year, it's the nation's longest-running investment conference and features some of the biggest names in economics and investing, including Jim Rickards, Ron Paul, Danielle DiMartino Booth, Rick Rule, Doug Casey, James Grant, Peter Schiff, and George Gammon. And of course, the Real Estate Guys are speaking again this year, plus we're hosting a private hospitality suite one of the evenings with some very special guests. So make plans to join the Real Estate Guys at the New Orleans Investment Conference. With everything going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, it's our co-host, financial strategist, Russell Gray.
Hey, Robert.
You know, today it is all about collapsing timeframes. We, for years, have used our motto, education for effective action, that education only does something if you do something with it. But the idea of collapsing timeframes is so critical. Rather than build wealth slowly, 20 years at a time, today, with technology and knowledge and wisdom and mentors, you can go a lot faster.
Well, and there's a lot of reasons you're going to need to do that these days. You know, first of all, you've got inflation. So you have to accelerate how fast you're growing your equity, you're growing your cash flow, because you have to outpace inflation. I think the world is waking up and realizing, hey, this isn't transitory. You know, the other issue that you've got is you've got depressed cap rates, depressed ROIs on a lot of investments, which means you got to go bigger so that that smaller percentage of a bigger number is a bigger number of absolute dollars. And that's what you need to be able to live on. So that's another compelling reason to go big. And of course, then you've got all kinds of people right now that are faced with the idea of pretty significant career choice, a job choice. You know, say what you want, but there are people who are either being threatened to be fired or who are deciding to leave because they don't want to take this vaccine. So you may be for it, you may be against it, you may think the government has a right to dictate or mandate, you may think they don't. It doesn't matter. This is what's happening out in the marketplace. And we know that there's a percentage, perhaps a significant percentage of this audience that's listening to this, looking for answers. Well, we're happy to tell you, you tuned into the right show, because we're going to be talking about one of the great answers to being able to get out of the rat race, build up that level of passive income, and do it much more quickly than you probably think you can do.
You know, getting out of the rat race, right? Our friend Robert Kiyosaki and his wife Kim designed this amazing board game, Cash Flow 101, where you start with the smaller deals and you work your way up to the bigger deals. And that really is how most people in real estate investing do it. I know my first investment was a duplex, and then I bought another townhouse after that. Then I bought a couple of single family houses. And many people who aren't in real estate full time, they're just investing on the side, maybe buy a house every 2 or 3 years. Nothing wrong with that. That is a slow and predictable path to wealth. If you do that, you and your grandkids are going to be happy 10, 20, 30 years down the line. But if you want to move faster than that, and a lot of people do, there's some great techniques and tools available today, probably more than ever before. And even if you're not a full-time real estate investor, there are some ways that you can get more done and get on a faster path to wealth.
Well, there's no doubt that there is a shortage of residential housing right now. When you look at the stats, you look at the rents, you look at the demand, you look at the migration patterns, in certain markets, there's just flat not enough. And some of the stuff that's there, you know, is being mismanaged. And the beautiful thing about real estate is that there is the opportunity to find a property that is being underutilized, is underperforming, is owned by somebody that is what we call a lazy landlord. And you can afford to be lazy in a hot market like this. Yet there's a lot of undeveloped potential. So, of course, you need to know what you're looking for. You need to know how to put the deal together. There's training and education that's involved. There's no doubt about that, right? Don't just try this at home, kids, right? It's not like you just read a book and you're going to go out and do a multi-million-dollar deal. But the fact is the deals are doable. And the other side of it, as we talk about all the time on the syndication side, is there's so much money right now that is looking for better yields, better inflation-adjusted yields, better opportunities for true equity growth, less volatility. And, people get concerned about a bubble in real estate, but I'm not saying there isn't in certain markets or in certain property types, but these aren't houses that are just sitting empty that people are speculating on. That's what happened in 2005, 2006. People were building in abundance. It was an oversupply. People were speculating on them. They were sitting empty and they weren't generating incomes. That's not what's going on today. And so there may be a bubble in the future, but I'm not convinced we're in a bubble yet. And so this is an opportunity for capital to partner with hustle, and whichever end of that equation you're on or both, you can get into the marketplace and solve the problem that's obviously there and do it so fast in a big way that you can build bigger wealth much faster again than you thought you could with the little greenhouses formula.
Well, there's essentially two piles of money. There's individual investors funds like you might have set aside to invest in, and other people want to passively invest alongside people that are doing it. And then there's the giant pile of money made available by the banks and lenders. And today, that money has to be put to work. In other words, there are local banks, and then there are Fannie and Freddie and everyone in between that want to get capital working, and they love real estate. The rates are low. It's plentiful financing. And if you can marry that to a great market, a great management team, and some skills that maybe you already possess because you've been investing in real estate, or you've got a great job where you've done project management or you've managed people. I mean, there's great opportunity today. And yet many people are still held back by this belief that it's too hard. I can't do it. Where am I going to come up with $2 million? Our guest today is going to help you break that paradigm, and he'll show you how you can pretty readily change your mind and change your life. When we come back, the Apartment King, Brad Sumrok, today on the Real Estate Guys radio program.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hey, ever wished you could go back in time and do some tax planning? Now you can, just like Marty McFly. Lucky for you, a brand new federal law just made this possible with an EQRP to get tax deductions and reduce your taxable income from last year, so you can use that tax savings to invest in real estate, Bitcoin, gold, even your own business. Whether you're a full-time investor, doctor, government employee, even if you have 5 or 50 employees, the EQRP works and is your secret weapon, and now it's retroactive. Hey, I'm Damian Lupo, and we have your solution. By the way, if you got bad advice and used an IRA for an apartment syndication, you are sitting on a UBIT time bomb. But don't worry, there's a solution, the EQRP. The EQRP company is ready to help you get control of your money, kill UBIT, and help you pay way less taxes. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report. Paying tax or letting Wall Street suck you dry is dumb. Your first step is freeing your retirement money by sending an email to eqrp@realestateguysradio.com today.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Hi, this is Simon Black from sovereignman.com, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 25th year of broadcast. We're talking today about making the jump from investing in smaller properties, single-family homes, duplexes, triplexes, even, small retail or something, up to the bigger stuff. And to do that, let's welcome the man we call the Apartment King, Mr. Brad Sumrok. Hey, Brad.
Hey, Robert, I'm happy to be here today.
Well, it's always good to have you here. Your story's inspiring because your first investment was not a single family house.
It was not, and it wasn't a duplex, it wasn't a triplex, it wasn't a fourplex. I could go on and on, but it was a 32-unit apartment building.
Yeah.
So that can be tricky, but the trickiest part is in your mind. Because it's not any harder to do 32 units as it is to do 1, 2, or 4. And I would actually argue that it's actually easier to start with something bigger than it is something smaller.
Well, this is a big paradigm break, and it's why I wanted to have you on to talk about it, because we meet lots of folks, and the natural kind of thing to do as a real estate investor is invest what you know. I live in a house, I buy a house, I rent it out, I save some more money, I buy another house, and that's the slow path to wealth. But today, you own thousands of doors and you help lots of people find places to live, and that benefits you. And everything on a bigger scale works smoother and better. And it's hard for people to get their mind around that. Your second purchase was another 30-unit building. Today, you buy 200, 300, 400 unit buildings. How do you get over that mindset or get to the place where you understand that it's actually easier?
Yeah, well, the one thing about mindset is, just think about different ways that people make money. And, a lot of people make money by going to work and having a job. And then maybe people become like an entrepreneur and they're self-employed. But if you just think about what, our friend and mentor Kiyosaki, at least what he taught me, is the 4 ways people make money, ESBI, right? And so when you think about being a business owner and investor, it starts to change the way you think, and it certainly changed the way I think. So going out and buying a house or a duplex or a fourplex, you're doing a lot of that yourself. Now, when you go and buy an apartment building, 30, 50, 100, 200, 300 units, you need a team of people. You need investors, you need providers, you need relationships with brokers. But once you're able to establish those relationships or lever other people that have those relationships, then it's actually easier because the banks like these bigger buildings better. The management companies like to manage these buildings better. The investors like to benefit from the economies of scale of having all these units under one roof and being professionally managed, so everybody wins. Plus, and I heard you mention, you're actually impacting more families because a lot of the buildings that we buy cater to workforce, working class people. And, if you buy one home, you're only providing one residence for a family. If you buy a 100-unit apartment building, you're providing 100 clean and functional units to working class people.
It's just shifting the way you approach it, right? It's this different approach than I'm going to buy a house like the one I live in. And nothing wrong with that, by the way. Lots of folks listening, that's what they have. They have a few rental homes. But in reality, when you start to think bigger, you can have greater impact, which I've watched you do, right? When you started, Brad, 20 years ago, you were a full-time employee investing on the side. Take us through that journey, because I'm sure we've got people listening who do something every day to live, thrive, and survive, but they got the real estate bug.
Yeah, so I had an engineering degree, have an engineering degree and an MBA, and I thought that was the ticket to success. I was taught to study hard, get good grades, go to college, save my money, stay out of debt, and stay out of jail.
Yeah.
And I did all those things. But what I found is I wasn't, financially, I wasn't making the kind of money that I thought I would be making after, studying for so many years and getting 2 degrees. And also there was something else missing. I wasn't fulfilled. I didn't feel like I was making the impact that I was meant to make. And that's why I did a multifamily instead of single family, because the first thing I decided was, and this is in the Kiyosaki's games and books, right? Your first step to financial freedom or getting out of the rat race is when your income from your investments meet or exceed your income from your job.
Yep.
Yeah. So back then, my income was around $10,000 a month. And I just started doing the numbers and I thought, wow, to get $10,000 a month of investment income, I need 40 or 50 houses.
Right.
If you just do the numbers and you say, well, each house is going to give you $200-$300 a month of cash flow.
Yep.
Well, you need 40 or 50 homes. And I'm thinking, that's a lot of homes.
Right.
But I wasn't deterred. And I went home the first day when I went to my seminar and I wrote out my goals that I was going to buy 50 houses within 3 years and retire. Well, the day 2 of the seminar, they talked about multifamily homes. And depending on the liquidity that you have and the team that you're able to build and the mentors that you have in your life, some people might be able to just skip that whole single family process and start right away in multifamily. So that's what I did. I went home that night and I ripped up my goals to buy 50 houses, and I came up with a new goal, which was to buy 100-unit apartments and retire from my job. And so my first deal was 32 units, and I'm like, hey, I'm 32% of the way there.
Yeah.
And then my second deal was 30 units, and I'm like, wow, now I'm like 62% of the way there. And all I needed to do was get to 100 and I could retire.
So for how long were you investing while you were still working? When did you make the jump, and how did you get through making a jump from leaving a safe, secure paycheck into the world of relying on your investments to pay for your lifestyle?
Yeah, that's a great question. So I wanted to get to that $10,000 a month of investment income. Well, after 62 units, I wasn't quite at a $10,000 a month. I was somewhere in the $7,000 to $8,000 a month range. So now I have more confidence, right? I got $7,000 or $8,000 a month coming in from 62 doors, almost like clockwork. I'm not paying tax on that cash flow because of depreciation.
Yeah.
And so right then and there, that's almost like $10,000 a month of earned income, because that's $10,000 a month of earned income is about $7,000 a month of after tax, right?
Yep.
So I had the confidence to walk away from my job. But it wasn't until I sold those two properties and did my third deal, which was a syndication where I learned how to use other people's money and not just my own, and bought 250 units. And that's when I walked away from my job. So it was somewhere in that like 3-year period from the time that I bought my first deal until I quit my job, because I had the cash flow, I had the upside, the net worth increases, but even more important is I had the knowledge and the confidence after doing that 250 unit. And I was surrounded by other people that were doing the same things. So I had the knowledge, the confidence, the network, the peer group, the track record. And it just took a few short years.
Yeah, that's awesome. And in fact, one of the things, Brad, that people struggle with is getting out of their own way. Like they're doing something, and some people, let's face it, they love what they do. They're impassioned. They own a business and they don't want to leave that, so they're investing on the side, while other people are more like you. They wanted to get into the active side. And you talk about the 3 ways that people invest in apartment buildings, and you actually just talked about 2 of them. But let's just cover that. Kind of the first way is what you guys did for the first 2 buildings. You bought these buildings on your own. You qualified. You came up with the down payment. You assembled the team. And that is a way. People do that to this day. But talk about the other 2 ways that you can invest in apartment buildings.
Yeah. So just, to recap, that first way I call being an individual, like buying your own deal with your own money.
Yep.
And, there are some pros to that. You don't need to raise money. You don't need to meet investor expectations, but there's more limitations than there are pros.
And by the way, you and I both still do that today.
We do.
We still invest in our own account. And so it's not that you're graduating to another way. It's just understanding the distinctions. And that's why I wanted to call this out. So there's some reasons why it's better, and there's a lot of reasons why maybe it's not the best.
Yeah. And look, everybody's limited by their own capital. Everybody to some extent is limited by how much their net worth is and how much liquidity they have to put into a deal.
Yep.
And so going back to thinking about mindset and what's possible, if you just think about your own financial capabilities, if you just think about your own liquidity and net worth, you're going to be limited on the size of a building that you could buy.
Right.
Okay. So that's why syndication is so powerful. And within a syndication, the other 2 ways to buy are you could be the leader of the syndication, which is referred to as a general partner, or you could be a limited partner in the syndication, or also referred to as a passive investor. And as you know, Robert, and I think you do as well, but I do all 3. I still buy my own deals with my own money, or I buy deals that have the majority of my money in it. I do that mainly because I like to get a lot of tax depreciation advantages.
Yep, which we'll talk about before we're done.
Yeah, and I love to be a general partner because general partners get paid in different ways than the limited partners. And in different ways, they get paid in more ways and they make more money. And so when we talk about, 10X, and we all know somebody that's very famous, that's a good buddy of mine, that talks about 10Xing your money. Well, how do you think we're doing that? We're doing that by being the GP and putting the deals together and raising the money and managing the asset. And that's why the GPs deserve to get paid more money. But then we have the limited partners where I invest as a limited partner as well, because I can't be a general partner in every deal. And also, there's a lot of deals that are being brought to me in markets where I'm not even looking at. And I want to be a part of these deals. And so I put money into deals where I'm leveraging other people doing all the work.
Yeah, in fact, early on, right, as I started to syndicate, learning the magic of syndication and was the general partner on everything, that was a huge way to really leverage everything you've talked about, not just the money, but the relationships, the market information and knowledge, experience, all those things. But today, my favorite thing is to invest passively with somebody else, right? They're going to do all the work, and it gets me exposure to a market I might not have considered, to a team I don't know. And so it's not, again, not right or wrong. The premise today is, how do I get from investing in little stuff to bigger stuff? And you don't ever have to make that jump. But if you do, it doesn't mean you have to take on the burden of being the guy or gal that's putting the whole thing together. Someone has to do that, the general partner, the promoter, the syndicator, whatever you want to call that person, executive producer of the deal. But lots of people just invest passively, and that is also a way to get into these bigger deals without having to do all the work.
Yeah, and being a passive investor is a great strategy for a lot of people that want to get into the business. And, what I would say, being a passive investor, you want to have access to the people that are doing the deals. You want to have access to the general partners, get to know, like, and trust these people, and get to understand the fundamentals of the deal. Because, look, there's only a few times I've lost money in investing, and it was because of two reasons. One is because I didn't know the people that were the general partners well enough, or as well as I thought I did. And two is because I didn't understand the asset that I was investing in. So no matter what you want to do, whether you want to be a general partner, a passive investor, or buying your own deals, you really want to understand the deal, the nuances of the underwriting and all those types of things, the fundamentals, and get to know who you're investing with.
Well, we appreciate when you come out and speak at our Secrets of Successful Syndication. We do that a couple times a year, and you're always gracious enough to come share and talk about apartments specifically, because that's what you do. But then I also usually impose on you to bring us a case study. And that is, we do several of those so people see examples of deals that are already done. The books are already closed on them, but at least they can get an idea around. And one of the things you've shared with us in those case studies are the deals that you and your wife still do on your own. And you mentioned tax. And let's talk about this, because real estate is one of the greatest tools to help manage your tax. And our friend Tom Wheelwright says, if you want to change your tax, you got to change your facts. You were a guy that did that. You were paying a lot of tax, and all of a sudden, that all changed.
Yeah, for so many years, I was focused so much on the first two of the three ways we make money with apartments, which is cash flow and upside. And our cash flow kept growing and our upside kept growing, and we'd buy deals and hold them and sell them. And we got to the point where I wasn't paying attention to the third way of how we avoid paying money with apartments, which is on the taxes. And we were at a point where we were paying almost $1 million a year in tax. And like you mentioned with Tom, if you want to change your tax, you change your facts. And so by putting in more of your own equity, putting in more of your own capital, you're going to have more ownership in these deals. And so the more ownership you have, the more depreciation you get allocated to you. The more depreciation you get allocated to you, the lower your taxes are going to be. So now, me and Jennifer every year, and we're not 100% owners in some of these deals, but there's 3 or 4 deals where me and Jennifer are the majority owners,
right?
Where we own anywhere from 54 to 80. There's 4 deals where we own between 54 to 96% of the deal. And that's because, number one, we want to control the deal. So we have a majority ownership interest. And number 2, we want to get that majority of the depreciation allocated to us. And so just like some of our mentors, like, we read about Warren Buffett and, Grant Cardone and Robert Kiyosaki, they have a lot of earned income from their businesses, and they take that earned income and they invest it in assets, and then they get the depreciation that offsets that income.
Which, again, just to circle back, is a lot easier to do on a 100-unit apartment building than on a single-family house. I mean, I get benefit. I get tax benefit if I own a rental home. But if you really want to make that a significant impact like you have to your portfolio, it's not that we let the tax tail wag the dog, but as we think about it. And so part of thinking about how do I move from little properties to big properties is also what else are you trying to do? You come in with a tax issue. A lot of people listening to the show make a lot of money and don't have a lot of tax write-offs. Well, this is a way to explore, a way to set aside and still make great money, but not pay as much to the tax man.
Yeah, and I get asked that a lot, and you hit it like, hey, Brad, isn't there tax advantages to buying a rental house or a duplex? And I would say, sure there is, but here's the thing. There's a certain cost that you need to incur to do what we call this cost segregation study, where the engineer goes in and separates the real property from the personal property inside the building.
Yeah.
So when you buy a $5, $10, $15, $20 million building, that cost of doing that study might be $5,000 or $7,000, but it's per door, you're paying so little.
Right.
And so, and maybe I'm wrong, I don't really do single family, but I don't really know of anybody that will buy a single family home for $150,000 as a rental and then pay somebody to do a cost segregation study.
No, it doesn't make any sense.
Doesn't make any sense.
And cost segregation has to be done by an engineer and a tax professional. You can't do it on your own. And we've actually got shows in the archives if you're interested in that topic. But the point is, you've got to be aware of these things. If I'm a single family investor, I probably don't ever even think about cost segregation or bonus depreciation or any of these things. But as soon as I get up to that next level, some of these other tools come into play. Our guest is Brad Sumrok, the Apartment King. We'll have more when we come back. Plus, we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
Registration is now open for the Real Estate Guys 20th Annual Investor Summit. Imagine spending an entire week with like-minded investors, world-class educators, and real-world professionals. Returning in 2022, the editor of the Gold newsletter, Brian London, international real estate developer Beth Clifford, the author of The Creature from Jekyll Island, G. Edward Griffin, Jim Rohn's 18-year business partner, Kyle Wilson, and the rebel capitalist, George Gammon. And joining us live and in person for his 10th Investor Summit, best-selling author and the Rich Dad advisor for real estate, Ken McElroy. Plus, lots more to be announced. It all begins June 10th, 2022 in beautiful Belize. Visit realestateguysradio.com and click the tab that says Summit to reserve your spot. Go to realestateguysradio.com, click Summit, and make plans to spend a week with the Real Estate Guys, George Gammon, Ken McElroy, and an all-star faculty on the 20th Annual Investor Summit on Sand.
Hey everybody, it's Ken McElroy and I'm on with the Real Estate Guys, and I'm very excited to be a guest and a speaker at the Investor Summit on the Sand in Belize coming up. If you haven't signed up, be sure to do so.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Make plans to join the Real Estate Guys at the 47th Annual New Orleans Investment Conference. You'll hear from folks like James Rickards, Peter Schiff, James Grant, George Gammon, Dr. Ron Paul, and the Real Estate Guys. To get all the details and be invited to our private suite party, just send an email to neworleans@realestateguysradio.com. New Orleans@realestateguysradio.com. We're talking about going bigger and making the jump up to multifamily properties. Before we get back to our interview with Brad Sumrok, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's Real Estate Trivia question. In just a minute, I'm going to give you the question, which has kind of something to do with real estate. I'll say definitely real estate. You'll see why when we get to the question. As soon as you think you know the answer, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. The first person that gets it right, by the way, is going to get Ken McElroy's great book, The Advanced Guide to Real Estate Investing. Maybe you've read Kenny's ABCs of Real Estate Investing, or even his latest book, The ABCs of Rental Property. This is kind of the advanced version, but it's not so advanced it'll scare you away. That can be yours if you know today's real estate trivia question. Last week on the show, we were talking about the changing landscape of education. We asked this: name the oldest college in the United States. Well, lots of folks knew the oldest college, meaning that it was started a long time ago and it's still running today, is Harvard University, founded back in 1636. And I understand people are still going there today. Here's our real estate trivia question for this week. We were talking earlier about the game Cash Flow, which was the Kiyosaki's attempt to improve the game Monopoly. Here's my trivia question for you today. How much money comes with every standard set of Monopoly? Yeah, when you go buy a Monopoly game today, how much money is in there? How much play money is in a set of Monopoly? If you know or want to guess or just want to pull out your game and count, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Send us your name, the answer to the question, and your mailing address. The first person that gets it right gets Ken McElroy's awesome book, The Advanced Guide to Investing in Real Estate. That's today's real estate trivia question. We're talking today about making the jump from smaller properties to bigger properties. It's not just about making more money. There's a lot of economies of scale. We're talking with the apartment king, Brad Sumrok. Good to see you, my friend.
Hey, I'm excited to be here. Thanks for having me.
Well, I feel like we always get to see each other at events and those kinds of things, and we hang out a bit, but this is just an area where you show an example to people that breaks a paradigm. Like, everyone assumes I'm going to start with a house or a condo, and then little by little, and you blow that away with, no, I bought a 32-unit building, I bought another 30-unit building, and then I bought a bigger building. Today, you don't just continue to invest, but you also teach people to invest. You help people to invest. I've had the opportunity to be at some of your events and be around your students, and boy, it's just a great group of folks. Talk about turning the lights on for other people, because you could just stop and be successful and you and Jen could invest. But instead, you have a heart to teach and just share kind of how that evolved. You were doing well at it. When did it occur to you that maybe I could bring people along?
Well, this is like what my life is all about. You see, because I studied so hard, went to college not once but twice, have 2 degrees, and never really achieved the level of success, fulfillment, passion, impact that I wanted to make. And I was actually, I have a slide in my slide deck in one of my workshops that says educated the desperate. So here I am doing everything right, but deep inside I felt desperate.
Yeah.
Now, I was never depressed. But I would say that I was unhappy. I was going to work every day in a commute, job hopping, trying to find my groove, trying to find my zone. And, when you're in your 20s, that's okay. But now I'm in my, back then I'm in my 30s and I'm starting to wonder about, is this all there is?
Right.
Is there anything else? And so the 2 pivots that made all the difference for me were the people that I surrounded myself with and the decisions that I made to invest in myself. And, by reading books like Rich Dad, Poor Dad and the Cash Flow Quadrant, by going to real estate seminars, which prior to reading the Rich Dad books, you would have never caught me dead in the seminar. Hey, I was educated. I had 2 degrees. What am I going to learn in the seminar? And I used to think that. And so the day I went to my first real estate investing seminar, I was the most skeptical person there. And, transition and fast forward, but those books and those seminars moved the needle for me professionally more than anything else in my life.
Well, and you still go to seminars and retreats and masterminds all the time. You're constantly learning. You're constantly sharpening the saw.
Yeah, me and Jen just believe in something that Tony Robbins came up with that called constant, never-ending improvement. And, before we went on this recording today, I was just telling you about a mastermind that we went to, and it was with all 8 and 9-figure business owners. when you surround yourself with 8 and 9 figure business owners, it's easier to become one.
Easier,
right? Just the fact that having a mentor and going to seminars and reading books had a big impact on my life. That's what really lights me up. Don't get me wrong. I love doing deals. I love the cash flow. I love the upside. I love paying no tax. And there would still be something somewhat missing for me. Mentoring people, doing events, doing webinars, providing education and content is something that gives my life meaning. And then it's amazing to feel when somebody just comes up to you and just say, hey, Brad, I just want to share with you the difference that your content or your training or your mentorship has made in my life. Just like when I met Robert Kiyosaki for the first time, I just wanted to tell him how much his books meant to me.
Yeah, absolutely. Well, in fact, coming up, you're doing a really cool thing. The Invest in Apartments Now Challenge. You've done a couple of these free challenges. And so we're going to invite people to be part of this because it's really cool. Talk about the challenge and how it works.
Yeah, well, the one thing I like to say about the word challenge is who doesn't like a challenge?
Yeah.
Like if you're listening to this and the word challenge turns you off, you're probably in the wrong. I think everyone listening to this loves to be challenged, right? Because that's the type of audience that you're attracting here. So everybody loves a challenge. My wife loves a challenge. I love a challenge. And so the challenge that we're going to do is called Invest in Apartments Now. Now, here's the deal. The timing of this challenge is perfect because as we roll into the end of 2021, a lot of investors are looking to place their money in deals. They're looking to get into something that has the cash flow, has the opportunity to go up in value, and also gives you immediate tax savings. And so we've done other challenges before, but none of them have been called Invest in Apartments Now. Invest in Apartments is important, but now is even more important because, I mean, look, at the end of 2022, some of these tax advantages that were passed in December of 2017 or September of 2017, some of these things are going to be phasing out. And so the whole purpose of this challenge now is to help people realize that it's still a great time to invest in apartments. By getting in now, they could realize amazing tax advantages, and not only for the end of 2021, but for the whole year of 2022. And so just looking at the calendar right now, there's 15 months of amazing, not only cash flow and upside potential, but tax advantages that are the best I've ever seen in my 20-year history of investing. Oh, and by the way, the interest rates are still at an all-time low. So now is one of the best times ever to be an apartment investor.
Well, what's fun about the challenge is, well, first of all, it's free and it's every day for 5 days.
Yeah, it's every day for 5 days. We start the 25th of October, and it's going to go between 60 to 90 minutes. And so I'm going to be the facilitator, one of the main speakers, of course, but I have assembled a really amazing team of speakers from all walks of life, but most of them are doing apartments that are going to be sharing the virtual stage with me. And Robert, you're going to be one of those speakers.
Yeah, excited to be there. I've done this a couple times, and it's great to see people get exposed to this thinking, but also the enthusiasm. Because part of being a real estate investor is you got to keep your mental head in the game. Like you got to wake up, and sometimes if I own a few single family homes and they're tenanted and I'm making money, and so, well, okay, there's no juice there. But when you get around other people that are doing it and getting you to think bigger, some of the things we've talked about today, it's exciting. And it really is a challenge, meaning you give folks some exercises and some homework to do. So it's not just sitting there listening to people. It really is pretty interactive.
It's extremely interactive. And the speakers that we have lined up are going to be incredible. We have a billionaire couple. They sold a company for over $1 billion, and now they're putting a lot of their money into multifamily. They own thousands of units. They're passionate about it. It's a husband and wife couple. And everybody's when I first met them at a 9-figure mastermind, we just connected. We fell in love with each other. And I'm so excited that they're going to be speaking at this challenge. And then we have yourself. We have a lady that I recently met that just a very successful network marketer.
Okay.
Network marketer, but she makes all this money, and she just invested $5 million into apartments. And so investing in apartments is going to give her an amazing advantage that she didn't have. See, network marketing, it's a great business, but it's still earned income.
Right.
And I believe that everybody wants to have passive income. You want to have money that Kiyosaki says, Warren Buffett says, the rich don't work for money. And so rich people invest in assets, and the assets provide you the cash flow and the tax advantages. And that's what true wealth is all about. So income and wealth are two different things. And so apartments and investing in apartments is really the ticket for so many people to create true wealth.
And like we've talked about, it's in one of the three ways. So I love the fact that you're going to have some passive investors at the challenge. You're going to have some active folks that are doing it. You're going to have people who've been in the business a long time. And it's just a lot of fun as well. I mean, your team really does a bang up job, and everybody is on a kind of a high energy mode. And it's really intoxicating. If you're interested in learning more about the challenge, all you have to do is send an email to ApartmentMastery@realestateguysradio.com. And also what we'll do is we'll send out information about the challenge. But the event that I love that you do several times a year is called Rat Race to Retirement. And that's an event that's coming up live in Dallas, Texas. I'm thrilled to be able to be there for this event too. You've got kind of a cool speaker announcement or two.
Yeah, the Rat Race is going to be an amazing event. And this is an event we've been doing for 8 years. And the reason I call it Rat Race to Retirement, it's my personal journey from the corporate rat race to early retirement by investing in apartment buildings. So during this event, I teach my proven 4-step framework about how to be a successful apartment investor. So I walk through understanding the deal, because the first step is to understand it, understand the nuances and logistical details of the asset class of what makes apartments different than other assets. I teach how to find the deals, I teach how to fund the deals, and I teach how to close the deals.
Well, let me just interject here for a minute, because having been several times to this event, you do a great job at the challenge and at your annual event, AIM-NatCon, of bringing in all kinds of speakers and mentors, and it's awesome. But the core of Rat Race is the fact that you've been doing this a long time. And to watch you teach something that you know super well, that you've overcome all of the mental blocks and all of the logistical challenges and all the being told no and qualification and all that. I mean, it's really hands-on. This is not a fluffy event. This is really hands-on, understanding everything you need to know about apartments.
Yeah, and that's what, people were blown away by how much content there is. And so, and the one thing is we still have that just the way me and Jennifer think is constant, never-ending improvement. So our outcome for every event is how do we make this one even better than the last one? And so you mentioned speakers. So traditionally, we don't have a lot of guest speakers at Rat Race because This is an event that I teach myself.
Yeah.
This time, and I'm still going to teach most of it myself, but this time we're going to have some amazing speakers that are very well known. So I think I'm going to announce this, by the way, but Damon John, who came to our AIM-NatCon, is now going to come to Rat Race, and we're going to do a pitch off where people are actually going to be able to pitch their commitment to investing in apartments and why Damon should consider investing with them live on stage at Rat Race to Retirement. And here's the deal. The last time we did this in AIM-NatCon, the winner of the pitch off got connected with Damon. Damon asked for their contact information.
Yeah.
So imagine coming to an event, not only learning for 3 days my proven framework, but having the opportunity not only to hear other people pitch, but what if this event could be the event where you become selected to be investing with Damon?
Yeah.
Or Damon wants to invest with you. Okay. And again, it's easy to, we had all these people at AIM-NatCon that some of them were afraid to get on stage because they thought maybe they would be rejected by Damon. But every single one of them, even the ones that didn't win the pitch off, got live coaching from Damon about what he loved about their pitch and what needed to be improved. And so the thing is, when you're going to be an apartment syndicator, and you and Russell teach this, you need to be a great communicator. You need to be able to communicate with people why they should invest with you.
And you need to be able to get over your fear, which is huge. Anybody who's watched Shark Tank knows that those folks are doing their best. But the most interesting part of the show is when the sharks pick it apart a little bit and do comment on the things that went well, but here's where you could improve. And that sounds super fun.
Yeah, so I'm super excited. So it's going to be our rat race to retirement with an amazing twist to it, with Dame and John being there in person in Dallas.
And there's a few other surprises. If you're interested in the challenge, which is totally free and something you should do if you've got your mind around, hey, maybe I want to jump up from single family to multifamily or just do bigger deals, you want to definitely be part of the challenge. Easy to connect there and a lot of fun. And then if you're serious about it, Rat Race to Retirement is now 3 days. It happens in November. To get all the details, just send an email to ApartmentMastery@realestateguysradio.com. ApartmentMastery@realestateguysradio.com. Well, Brad, it's been great connecting. Love the direction this is going. We're thrilled that you're going to be back at our syndication event in March and on the 20th annual Investor Summit.
Yeah, I'm excited about that. The summit this year in Belize was great. Met some phenomenal people. Excited to be there again in 2022. And excited about your events in March at the Secrets of Successful Syndication.
Good stuff, my friend. Well, thanks for sharing what you do. There's Brad Sumrok, ladies and gentlemen. We'll see you next time.
And thanks for having me, Robert. It's been great.
There's the Apartment King, Brad Sumrok. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com. Are you achieving everything you want in life? What if there was a time-tested way for you to get all you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2022 Goals Retreat, January 7th to 9th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events or call 888-489-7723 extension 18 to reserve your spot. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2022 Goals Retreat on the second weekend of the new year. Click events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723 extension 18 today.
Hi, I'm Naomi Prinz, author of Collusion. You're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. If you're looking for more clarity in your life, if you want to figure out what's going on so you can have more, be more, and do more, come join us for the 2022 Goals Retreat in beautiful Lake Las Vegas, Nevada. It's called Create Your Future. You get all the details on the website at realestateguysradio.com under events. We're talking today about going bigger in your real estate investing and making the jump to multifamily. Always awesome to hear from the Apartment King, Brad Sumrok.
It's been fun to watch Brad develop as a teacher and a trainer and a mentor. You know, when we first met him, he was already pretty well established in that regard, very successful apartment investor, but he really turned it up quite a bit in terms of expanding his ability to teach a lot of people effectively. First of all, he knows what he's doing. He practices what he preaches. He walks the talk. He knows what he's doing. Number two is he underwrites the market as well as the deal. A lot of real estate investors, I remember, Robert, one time you had an opportunity to go take a look at a deal that a friend of ours had purchased. And it was a 66-unit building, as I recall, somewhere in Texas. And you were out and about. And he said, hey, would you stop by and take a look at this? It's not performing well. And you went and took a look at it. You said, well, no wonder it's not performing well. There's nothing wrong with the property. It was where the property was located. And so it's really important to pay attention to the market. So Brad has very strict underwriting principles that he looks for in marketplaces, markets he will invest in, markets he won't. Before he ever looks at the deal, he won't even look at the deal until he understands the market. And then when you get into the nuts and bolts of the deal, then there's that level of underwriting where you just have to understand, are the rents real, where are the opportunities for improvement, all that kind of stuff. And then the other thing is he does a great job creating a community, an ecosystem, if you will. We do that here at the Real Estate Guys. We talk about education for effective action. When people come into our world, like our Secrets of Successful Syndication seminar, they want to learn syndication. They meet a lot of people who can help them. They have clubs and networking groups that they can join and become a part of. Brad does the same thing. And so it's a great methodology for developing people. If you're out there and you're sitting there thinking, gosh, this sounds really, really interesting, then now's really the time to take a look at it. There's still a lot of meat, I think, on the bone, if you will, of real estate, in particular apartments. And the key is just having the right person who really knows how to do it, teach it to you. Brad's front end stuff is very inexpensive. It's very high quality, very well run. I think you'll really enjoy attending.
And it's not to make it sound complicated and crazy hard to do. Quite the opposite. It's a pretty easy part of the market because there is great financing available and people understand residential housing. Apartments are businesses and they run like businesses. And Brad's Apartment Challenge is coming up. It's totally free. It's going to be fun. It happens over the course of 5 days and it's 60 to 90 minutes a day. And Brad does challenge you to think about some things, to do some journaling, to do a little homework, but you'll enjoy meeting some of the guests that he has. All you have to do if you're interested in that is send an email to ApartmentChallenge at realestateguysradio.com, ApartmentChallenge at realestateguysradio.com. We started the show talking about collapsing timeframes and doing more sooner, and there's a lot of reasons it makes sense to put your foot on the gas right now and not on the brake. And I think, Russ, when you take the idea of going bigger, instead of investing in a single family home that produces $200 or $300 a month positive cash flow, you invest in an apartment building that can do 100 or more times that, and you combine that with the power of other people's money. This is a huge opportunity.
Yeah, well, it's no different than if a family gets together to buy a house or a compound they couldn't afford individually. And if all of them each waited until they could afford it individually, inflation takes the opportunity away instead of being a benefit. In other words, if you buy the property early in an inflationary cycle, you benefit from the ride up. If you're trying to outsave inflation, and the properties are running away from you, you just fall further and further behind. So the quicker you band together with other people that are facing the same problem and can't get the deal done without help, then you help each other and you get there. And if you happen to be the sponsor or the ringleader, the person who's putting it all together, which is, of course, what we teach in our syndication seminar, then you have the opportunity to get a piece of the action, maybe an additional piece of the action for your hustle, for your sweat equity. And the key to doing all of these things is not to try to learn it all in a classroom and then go out in the real world and be a sole practitioner. The key is really to get involved in a community of people that's doing it, to work small as an investor, but big as a deal doer. In other words, you can be a $100,000 investor in a $10 million apartment building, and you get all the education, you get all the exposure to the deal, you get the deal on your resume, and you get the benefit of the people who are putting the deal together being the mentors in the situation. And as you go through that, you learn, and then pretty soon you're that person. So I think anybody who's seriously thinking about apartments ought to check it out.
Big thanks to Brad Sumrok for sharing his knowledge and his energy with